All right, today we're going to deconstruct a really fascinating puzzle in the market. We're looking at Micron Technology. Now, on the surface, its chart looks absolutely perfect, like the kind of stock you dream about owning. But just beneath that pretty picture, there's a huge conflict brewing that turns this perfect setup into a potential trap. So let's break down exactly what's going on here.
And this really gets to the heart of the whole thing. How can a stock be a fantastic long-term hold, but at the exact same time be a terrible short-term trade right now? That's the puzzle we are going to solve together.
So when we first ran my friend through our system, everything looked pretty good. It passed all the initial basic safety checks you'd want to see, but hiding just under the surface of that clean bill of health was this major conflicting signal, basically a battle between two completely opposing forces.
I mean, look at these initial checks. They're incredibly clean. Data integrity, passed. Liquidity, it's huge, over $2 billion a day. Volatility is healthy, and there are no earnings reports coming up to ambush us. The only little warning sign is the broader market, which is trending down. That's our first clue to be just a little extra careful here.
And this right here is where the story gets really interesting. The final score comes in at 69, just one solitary point below our approval threshold of 70. So you have to ask, what was powerful enough to drag down an otherwise stellar-looking setup? To get that, we first need to build the bull case.
First, let's dive into why this stock is so appealing to begin with. This is the bull case, and honestly, the structural data is just overwhelmingly positive. It's really, really strong.
We start with the Ichimoku Cloud, which is a great tool for visualizing a stock's trend and its overall structure, and Micron scores a perfect 10 out of 10 here. The price is way above the cloud, which is just a classic sign of a strong, healthy uptrend. So far, so good.
And the strength just keeps on coming. We get another perfect 10 out of 10 for its position relative to the anchored VWAP. Now that's basically the average price paid since the start of the year, weighted by volume. It's a key level that all the big institutions watch. Holding above that, that's a huge sign of strength.
And this number just brilliantly illustrates its power. Over the last 3 months, Micron has outperformed its own sector by a staggering 91%. Think about that. While a lot of tech's been weak, Micron has been a true leader. It's not just floating with the tide, it is actively swimming against it.
So, the bottom line is this. From a long-term structural standpoint, this stock is an absolute beast. Everything about its chart, its foundation, it all screams strength, leadership, and a confirmed uptrend. If our analysis stopped right here, this would be an easy no-brainer buy. But our analysis does not stop here. Because despite that rock-solid foundation, there is a huge red flag waving. We're talking about its sudden, dramatic collapse in its short-term energy. This is the complete opposite of that bullish case we just built.
And this one problem, well, it changes absolutely everything. This is the critical flaw, the single factor that caused this entire setup to fail our checks.
Just look at that, a 0. After seeing perfect 10s for structure, the momentum score is absolute 0. The MACD indicator, which measures that short-term buying and selling energy, is negative, and it's actually accelerating downward. All the immediate buying pressure has just vanished.
We have a name for this. It's called a falling knife scenario, and the name says it all, right? Think about it. You have this strong, heavy object, but it's plummeting. Trying to catch it is incredibly risky. The structure is strong, sure, but the immediate direction is violently down.
And this slide just lays out that conflict perfectly. On the left, you've got all the reasons to buy. Price is above the cloud, it's above the VWAP, long-term it's a strong buy. But on the right, you have the big reason to stay away. The MACD is falling, the momentum score is 0, the immediate energy is pushing down. You simply can't ignore that side of the equation.
So, how do you resolve this conflict? You've got this bullish structure, but this bearish momentum. Well, the verdict is that the stock is currently stuck in a place we call no man's land.
So what exactly is no man's land? Well, it's when a stock is too weak to buy as a breakout because, its momentum is negative, but at the same time, it's not cheap or oversold enough to buy as a bounce play. It's literally caught in the worst possible spot for a new trade entry.
So let's break down exactly why this is a hard avoid for now. First, with negative momentum, you can't buy it hoping for a breakout. Second, you can't buy it looking for a bounce. Its RSI, which measures if a stock is overbought or oversold, is at a neutral 56. For a bounce, we'd want to see that way down, below 40. The most crucial point is this. The immediate path of least resistance is down. Buying now means you're fighting the current.
Okay, so knowing all of this, what do we actually do? I mean, analysis is useless without a clear, actionable plan. So let's build one right now.
Here it is, step 1, and it's the most important. Wait. Do not buy at the current price. Step 2, monitor. Keep a close eye on that key support zone between $225 and $230. Look for signs that it's turning around. Step 3, set an alert at $245. A strong move above that level could be the signal that momentum is finally back. And finally, step 4, define your risk. If you do take a trade, your absolute, no questions asked stop loss is $217.39.
You know, this quote just says it all. This isn't about Micron being a bad company. It's not even saying the chart is broken. It's simply a recognition that for a trade, timing is absolutely everything. And right now, the timing is just off.
And that leaves us with a final thought to chew on. We did all this analysis not just to avoid one bad trade, but to find a better one. And so often, the difference between the two isn't some fancy new indicator. It's just a better entry point, which really makes you wonder, in trading, could it be that patience is the most profitable strategy of all?